In this video, I'm going to be sharing you my live trading session. We're looking at S&P 500 mini futures. Time frame is 2000 tick chart, and we're going to be day trading price action, which means I'm relying on the naked candlesticks as they are printing on a chart. There's the reason to price movements, and for that reason, I'm using price action tools to help me make my decisions. You can see I'm identifying the key levels and I'm identifying the channels because I want to follow the trendline rule, which says after break of a channel, traders expect for prices to create new extreme break, followed by a new extreme, break here, followed by a new extreme. And right now we have somewhat of a bullish bias, but the structure is still for the most part indicating a trend range. Unclear bias, the market will open in 3 minutes, and after that I will have a clean picture of where the market is heading. After market open, notice we had a new extreme and we had a form of a two-legged pullback. We have a new high, first attempt to go long, pullback, second entry long. This is where the market was opening, and notice prices pushed higher, exponential moving average kept holding and indicated a bullish pressure. And this setup right here is high-low confirmation of the two-legged pullback. Now, two-legged pullback, you can see, was not great because the signal bar was not good. Also, the short-term channel was in play, but the high-low nicely confirmed it, and we extended the channel, so we expected new high, but the signal bar was very neutral doji, tiny little bullish body. If this signal bar was better, this would have been a great entry, but unfortunately, there was no way to enter this. Really was hoping for a nice signal bar here, but high-low confirmation of the two-legged pullback. All right, traders, I'm resuming the video as I entered a failed second entry short. Hopefully, I managed to get my orders right. We have a new low, we have a first entry short, pullback, second entry short, off the exponential moving average. And this was a quick trade, so I'm going to quickly tighten this. So we had a two-legged pullback, but we didn't really quite touch EMA. And then we have confirmation, new low, first entry short, second entry short failure. EMA kept holding, decent bullish bar, structure is a bullish uptrend. Anything we make right now is just a bonus. And you can see we got stopped out of our runner. But this was our first trade for the day because we had a new low, first entry short, second entry short, exponential moving average kept holding. And structure at this point on is quite bullish. This second entry long wasn't bad, but notice there's a little gap to EMA and there can be additional pullback. It managed to work, but this is also a good high probability setup because when the structure is bullish, I'm looking for high probability setups to buy. Notice first entry long, second entry long, high low, first entry long, second entry long, and this is a new low, first entry short, second entry short failure. So high probability setups on the way up. You don't want to keep chasing the market, buying at the highs. You wait for the correction to the EMA. You can see this is a supportive indicator, key entry point. And if you wait for the correction, you want to buy low. You don't want to be chasing the market, buying high. You want to buy low when the market is correcting and the push phase can start. And you can see we just got stopped out of our runner to see it go higher. Unfortunate. All right, traders, so I'm preparing my limit order. If we get another second entry long or higher low, depends how you reset the count because we have technically second entry long, but these highs are matching so close. I'm treating this only as a first entry, and also prices are very far away from the EMA on a higher time frame, so I don't want to take this just yet. I definitely want to see confirmation. We are quite overextended, so if this bar reverses to the upside strongly, I'm going to take it. Let's see the signal bar, and the signal bar is doji, so I have to wait. All right, so prices created, look at this, new high, reset the count, first entry long, pullback, second entry long, first leg down, second leg down. So micro two-legged pullback. This downtrend has a break new extreme. Had it closed slightly above EMA, I almost entered this, but it closed below EMA, so that worried me a little bit. All right, so the downtrend has a break new extreme. We have larger two-legged correction and we are breaking the main channel. So right now we will see if we can push above EMA and give us a failed second entry short to look for new extreme of this uptrend. The uptrend was quite wide, so we may have a longer correction. There was nice a failed second entry long, which was definitely a very tempting setup. Notice new high, first entry long, pullback, second entry long, but you cannot go long below EMA while the downtrend is new extreme. So this was definitely a decent setup to take great signal bar and a great trap. Exponential moving average kept holding, and you expect second leg down, a new extreme to be formed. All right, traders, I'm resuming the video as I'm going to take a high-low confirmation setup. Going to go for 8 ticks because it is nicely confirming the channel and we have very strong massive spike up. Initially I was expecting a failed second entry, we're bouncing over X zone and we finally tick through, so I'm going to quickly tighten this. And this is a high low after strong push above EMA, so I'm going to tighten the runner at break even because anything we make is just a bonus. The reason why I'm entering this trade because we had very strong bullish momentum. Initially I expected to get a failed second entry short, but after I see 5, 6 big bullish consecutive bars working higher, I expect new high for this uptrend. I decided to take a chance here because we tick one tick lower, instantly reverse up. and the momentum showed me that there are buyers really buying market strong here. So this is definitely more advanced, a little bit more aggressive. This is our second trade, but I really like taking a chance here because you're really supposed to get high-low right after EMA. And once you see such a massive push up, it feels like there may not even be a failed second entry short before we deplete this leg up. All right, traders, as you can see, prices once again went back to our break-even, stopped our runner before we had a chance to milk the runner a little bit more. Unfortunately, no runner on both trades, just by one single tick. But these are our two trades for the day. I'm gonna wrap it up because it is Friday. So you can see first leg down, pullback, second leg down, break of a channel, and I expect for prices to create new extreme of this uptrend. So that was my session today. And as you can see, I extended the channel a little bit. Why did I do that? Because when I see prices pushing to the upside and they are not correcting, even though it looks like prices created new extreme, notice no correction, no reversal, very strong bullish momentum. This is indication to me that the price action is behaving still like it would be in a bullish uptrend. And also, I'm using a 10,000 tick chart for bias confirmation. And when I took a look at 10,000 tick chart, I observed that the channel was still in play. Here we are looking at 10,000 tick chart. Okay, you can see how nicely the trend line is fitting on this chart. And in this particular area, you can see prices still reacting and confirming this important key level. So once I saw this, I slightly adjusted my channel on the 2000 tick chart. And we're doing this because we want to follow the price action. You can see if someone tells you market geometry is not real, you can show them this chart. You can see how nicely this channel is getting confirmed. And every single time prices make their way to the EMA and the channel, it keeps offering setups and reaction. There is a break and a new extreme following the trend line rule. So this is why we're looking for channels. And this is why we're looking for two-legged pullbacks, because we want to buy low where the key entry point is confirming the high probability setup and where the correction is ending. You can see I made the channel just a slightly flatter, but it still fits really well and get confirmations here. And you can see it works throughout the rest of the session. So it is very important for you to analyze what is the structure, so you know what kind of setups are you looking for. So this particular day, it is easy to identify that we are trading a bullish trend. And according to rules, our job is to wait for the correction to play out and buy low. Notice you're not interested in chasing the market all these highs. You're not interested in taking random setup first entries. Market moves in pairs of twos and you want to sell after two-legged correction. Notice this is the first time we talked about new high, first entry long, second entry long, and you had nice high-low confirmation. And notice you always want to wait for the correction to play out and buy low. So then there was a nice second entry long. Notice we have a new high, first entry long, second entry long, and this is very nice signal bar, tier 1 bullish signal bar. That's not the only thing that is great about the setup. The structure still remains bullish, and notice one bottom, double bottom, and triple test of this double bottom. So as a price action trader, you're using price action tools to help you identify high probability setups, and this support is adding more confidence that the buyers are going to jump into the market, combined with the two-legged pullback, great bullish bar, and it resulted into scalp. Now you can see there is even a wider channel, which you don't necessarily need to draw. It can only benefit you. But remember, when the trend is this strong, there are going to be multiple new extremes after new extremes. So you don't have to focus on these channels too much. Like I said, they can help you, they can hurt you. But the patterns you need to focus on are these channels working to the downside. You have to draw these, because if this channel is in play, you still expect for prices to create new extreme, despite the fact that the main pattern is bullish. Okay, so we have a leg down, which when to see this, you expect after a break to get second leg down. Okay, you had a quite overextended push phase. There needs to be correction, so you expect two-legged pullback, perfectly measured move, new low was formed. You have a second entry short. This is where we start counting again. First entry long, second entry long, failure. We expect still new low. Normally, I would not mark short setup in a bullish trend, but when the channel is wide quite substantially, there is room for prices to correct to main trend line, and you can take good traps, good short setup if you're an advanced trader and you can recognize it. Okay, I would not recommend taking these short setups if you're just starting out, because it's hard for you to exactly analyze which trend is strong, because sometimes you may get trapped. But if you understand what's going on here, you can see how great the signal bar is. This was quick momentum. This happened really quickly. EMA kept holding. You cannot go long below EMA while the downtrend is new low. Great trap. Then you confirm the channel. You don't get a good failed second entry short, but you're still counting for two-legged pullback. And it's basically the theme, how you're following the price action. You're just counting for two-legged pullback or failed second entry short. So this is the highest high. We're going to reset the count and we have a first entry long, pullback, second entry long. And this looks nice, like a visual first leg down, second leg down, which is indicating end of a correction. Signal bar bullish is fairly good, but we have congestion, 1, 2, 3, 7 bars stacked. Unfortunately, this is the problem with this setup. It is at the EMA, you even need new high of this channel. So not a horrible setup, but the congestion prevented us from taking the setup, because once you see congestion, market can whipsaw a little bit. It can stop you out just by one tick before going in the direction you thought it was gonna go. This is why we respect congestions. New high formed. Notice we are pushing all the way back down. So that means I need to redraw the trend line. We have a high low, but that's not good enough setup. We still can get new extreme. I need to wait for trap because this downtrend was quite strong and needs to get new extreme. We have a new low, first attempt to sell, pullbacks, second attempt to sell against the main bias, which is bullish. So that most likely it's going to be a trap, and we have a failed second entry short right at the EMA, great bullish bar. Now, when I was watching this live, it felt a little bit too close to these highs, and I was really expecting for market great second leg down. But this is what can happen inside of these strong trends. It feels like you're buying at the very high, but market still keeps pushing higher and still keeps pushing higher. Generally, when you have strong, healthy trend, it is not that flat. This is very wide channel. Generally, strong trends are narrow, but still this was a combination between these two trends. And this is a good setup, high probability setup. And after this setup, you can see there is quite a long area without a decent high probability setup. You can see we are flattening. Price is swinging up and down, so you're entering a trend range structure. And the goal is, once again, pretty much simple price action. We just wait for the correction to play with the break new low, and then we wait for the confirmation, push above EMA and high low. Here is where you would expect to get at least higher low, of course, ideally felt second entry short, but it never formed, just a V-shaped reversal. The same thing happened here. You can't really pick a bottom here because you can see how prices is slowly but surely working lower. You're gonna get trapped. For that reason, you just want to wait for prices to push above EMA, and notice it would confirm the failed breakout, but no high low form. By the time you get high low, it's way too far here, far from EMA. Another V-shaped reversal, and the same scenario occurred here again. First leg down, second leg down, support keeps holding, push above EMA, but no high low. Just another V-shaped reversal without a chance for us to capitalize on this rally. We can't really go long at these highs. We need to wait for correction phase to finish. Notice I redraw the channel. As long as this channel is in play, I cannot go long below EMA, break new extreme. Okay, now it is safe for us to go long. You expect high low, but you don't get it. You get high low here, this is way too far up. It already moved way too far up. Notice it basically retraced to the very high here. I don't really recommend it. You will need to wait for second entry long. You almost get second entry long here. Technically, micro double top resets the count. So count starts over and we hit just first entry long. Had this been second entry long, this would have been good setup to take, because at this point on the trend is really strong. You feel you're going to push higher. So this is more aggressive because you need to reset the count, but it is similar to two-legged pullback. So if you took this, I can see why. Notice another count reset. First entry long, pullback, second entry long, great signal bar. Market created a scalp. Downtrend working lower. We actually have second entry long here, which worked. But notice how little the correction was. The downtrend is still in play. The body is still not touching the EMA. This is looking like EMA tail trap. You can create a pullback to the EMA. I don't really like taking this. You're risking really a lot. Notice it barely worked before there was a stronger correction. Break new extreme for the correction, indicating the downtrend played out. Okay, we are pushing above EMA, confirming the overall trend. Okay, we have new high, first entry long, pullback, second entry long, and this is a shame because this otherwise would have been a perfect two-legged pullback. Downtrend played out with the breaking new extreme, and when it looks like a clear two legs, you want to draw a channel tight, not too wide. You want to draw a Y when it resembles basically one leg down. You can spot two clean legs. You want to draw it tight, but notice the signal bar, pure doji, follow-up bar, even worse bar. So this is a textbook setup with bullish signal bar, but unfortunately the signal bar really preventing us from taking the setup here. No really great setup. And then we had a nice high-low confirmation of the second entry long. And also visually, this looks like a failed second entry short new low, kind of like a first leg, pull back, second entry short. Right at the EMA, great signal bar, high-low. Unfortunately, this setup ended up failing just barely before market continued working higher. So this is very unlucky that only signal bar that is great and the setup is good just doesn't work, and otherwise signal bars before just really didn't form that well on good setups. So sometimes that can happen in trading. You can't really filter these trades out. This is a great setup to take a chance on, and unfortunately it just stopped you out before market continued working higher. Now this is where we reset the count again, and a similar pattern to this pattern right here. First leg down, correction, second leg down. Right at the important key level, this is the strongest key entry point for the day, and a second entry long. Great high probability setup, downtrend played out with the break new low. Notice market journey to move up. Break of a channel, but we're not looking for prices to reverse. In fact, according to rules, we expect new extreme for this uptrend. So you wait for push above EMA, but there is no great setup here. You're below EMA or stacking up. You reset the count. Another push above EMA confirming the bullish momentum. First attempt to sell, pull back, second entry short, failure. Small inside bar, but following the rules, and market created new extreme. This is the bigger picture for the day. Textbook channel. There was this long area without any high probability setup. Basically all the good setups form here. Then you have to wait for a long time, and then you had a couple of decent setups later on. But pretty much you can see very straightforward uptrend. It just takes time for prices to correct. Once you let the correction play out, this is where you start looking for longs, and you just wait for a high probability setup. Either they form, they don't, you can't force entry, you just wait for the next correction, and the high probability setup either forms or it doesn't. They just basically rinse and repeat. Simple price action, you can't really overcomplicate it. If the trade ends up failing, that can happen. The goal is to keep following the rules, so in the long term, the numbers are on your side. So I hope you find the video helpful, educational. I hope you had a great day, and I'm going to see you guys in the next one. Take care, everybody.